Hi traders, welcome back to FTMO. In our last video, we explored FOMO and how the fear of missing out can influence our trading. Today, we are diving into another destructive habit that comes straight from money psychology: revenge trading. Revenge trading happens when a loss feels so painful that you jump right back into the market, trying to win it back as fast as possible. And here's the thing: most traders know they shouldn't do it, but still fall into that trap. Why? Because it isn't just about discipline or strategy, it's about what losing money means to us on a deeper level. Money is never just numbers on a screen, it's tied to safety, freedom, and even self worth. If you grew up in an environment where money was scarce, then every loss can feel like a threat. Like that old fear of not having enough is coming back to life. If you were raised with a pressure to succeed, then losing money might feel like a personal failure. That's why the urge to get it back now is so strong. Your brain isn't operating in logic anymore, it's reacting to old beliefs and emotions. This is why the cycle of revenge trading keeps repeating. You take a loss, your deeper fears get triggered, and suddenly you're placing a new trade that has nothing to do with your plan. That emotional trade leads to more mistakes, more losses, and the spiral continues. It feels urgent because in that moment, your mind sees the loss as a danger, not just feedback. So, how do you break out of it? The first step is to create space between the loss and your next move. One tool I recommend is the pause rule. After any losing trade, wait at least 10 minutes before doing anything else. Use that time to write down what you're feeling. Ask yourself, am I about to follow my strategy or am I trying to fix an emotional wound? That short pause is often enough to shift you out of fight or flight mode and back into rational thinking. The second step is to reframe what losses mean. Instead of seeing them as failures or threats, remind yourself that losses are part of probabilities. They are not danger, they are information. A single loss doesn't define your skill as a trader, just like a single win doesn't prove you've mastered the market. What matters is consistency over time. And beyond those quick fixes, the real long term work is reshaping your money mindset. Start shifting from a scarcity perspective, I have to get this back now, to an abundance perspective. There will be always more opportunities. Detach your self worth from your trading account. And remember that the goal isn't to repair every setback instantly, but to follow a process that works over the long run. So here's my challenge for you this week. The next time you feel the urge to jump back into the market after a loss, pause and ask yourself, is this decision coming from my trading plan or from my past beliefs about money? Write it down, reflect on it, and with some time, you will see what changes when you step back from that impulse. Mastering money psychology isn't just about avoiding mistakes, it's about freeing yourself from old patterns that no longer serve you. And once you do it, you'll notice not only a difference in your trading, but in how you relate to money in your life as a whole. Until next time, trade safe, stay disciplined, and keep working on your mindset.